What's going on, guys? I just wanted to make a quick video about how to analyze charts with just basic and pure market structure, because a lot of people don't know how to do it and a lot of people overcomplicate the process drastically. So I'm going to show you guys very, very basic market structure, how to analyze market structure, and how to create great trade ideas off of it. Because the reality of the situation is if you're trading the 5-minute, the 50-minute, or the 1-minute chart, the 15-minute, the 5-minute, and the 1-minute is just doing whatever the 1 hour, the 4 hour, and the daily, or the weekly or the monthly wants to do. Right? That's the reality of the situation. I recommend analyzing the daily, the 4 hour, and the 1 hour on a day-to-day basis, and then the weekly and the monthly maybe every week or 2 weeks, just so you can kind of understand the overall flow. Sometimes there's some hidden gems in the weekly and the monthly, but 99% of the time you want to stay on the daily, the 4 hour, and the 1 hour to do your overall analysis. And I'm going to quickly show you guys how to do that, and in a little bit I'll go on the charts and show you that. Now for market structure, there's 3 cycles in market structure. Okay, so you have your what's called an uptrend, which when you're going to have kind of this move like here, where you're going to have your higher highs, your higher lows, your higher highs, and your higher lows. Okay, and this is called an uptrend. Right, and you guys see this all the time in bull markets. Some people call it a bull trend, uptrend, bull channel, etc., all the same. All right. Then you have what is called your downtrend, right? And this is where prices are making lower lows and lower highs, lower lows, and then lower highs. Okay, and then lower low. This is called your downtrend. Then your third market cycle is called your trading range. Okay, this is where price has relatively equal lows and equal highs, and all it does is bounce between 2 levels of support and resistance. Right, that's going to be your trading range. And this is very, very important, because if you can identify what market cycle we're in, it makes trading 1,000,000,000% easier, because each one of these market cycles has a way to trade it. It's like a game of Simon Says, right? If Simon says uptrend, then you want to follow. If Simon says downtrend, well, you want to follow. If Simon says trading range, well, you're going to want to follow. A lot of people lose money because Simon says uptrend and people are shorting. If Simon says downtrend, people are buying. If Simon says trading range, people are trying to guess like a breakout above the highs, and price keeps failing. So it's very, very important that you always say to yourself, hey, what cycle are we in? Okay. And the way that you trade an uptrend is you buy higher lows, expecting a higher high. The way that you trade a downtrend is you short lower highs, taking profits at the lower lows or partialing, and then leaving a runner to see how long you can catch this trend for. Right? For trading ranges, what you're looking to do is you're looking to short the highs and buy the bottoms. Right? Why? Because Simon says we're in a range, and until we break out of this range, we're trading range rules. Okay, we're not looking to break out above this trading range. We're not looking to short below this trading range. We're just playing the rules. And then once price does break out, do we short? No, we wait for a pullback to that range, and then we see if price is going to start a downtrend, right? And then now you have the pattern of the lower lows and the lower highs, and vice versa on the highs. Okay, that's your basic 3-step market cycle right there. Okay. Now, there's 3 phases to a trend. Okay, so the 3 phases to a trend, and I'll make this in purple, and I'll put 3 phases right here, is your break, right, your breakout, your retest, and then your continuation. Right, these are going to be your 3 steps, and it's very important that you memorize this, because this is how the market moves. And I'll show you an example right here of what I mean. So you can see we have a higher high, higher low, and then this higher low breaks out above this higher high. So that's the first phase in the three phases of a trend. So what then happens is we then get a retest of that area where we initially broke out from of that higher high. Okay. Then once we get there and we fail to go lower, what happens? We then get the continuation. Okay. And that's your breakout, your retest, and your continuation. And this is very, very, very important because what a lot of people do is they wait for a higher high to break and then they go long in here. But the problem is once you start going along in here, you get trapped by the retest. And then what happens is people start shorting here, hoping that the market comes down there, and they get trapped by the continuation. Why? Because they don't understand market cycle. Or not market cycle, excuse me, the three phases of a trend, right? There's three phases. So the best trades in a trend is going to be when you wait for the retest and you get in on the continuation. Okay. So that's going to be, for example, right? Price breaks out. You know, you're a good trader, so you understand, hey, this breakout above this higher high means that we're likely to get a retest or a correction, right? Then you wait for price to retrace to that level, wait for it to fail to break out lower and start to break back above, and then you buy targeting this higher high, either taking full profits at the higher high or partialing and leaving a runner to see how far prices can go. Okay. And it's the exact same thing on the downtrend, right? Let me clear this up for you guys so it's easy to look at. Same thing here, right? The downtrend, what do? Our lower high breaks out below the lower low. If you short here, you're going to get trapped. Why? Because remember, guys, you're waiting for that retest back to the lower low. Then once price fails to break above this level, right? And again, it can still go above this level, but there's a difference between going above this level and breaking out above this level. Okay. So for example, going above this level is normal. Sometimes you get a deeper retracement. You know, sometimes you get literally tick perfect to this. Sometimes it doesn't even come back that far, right? But waiting until it reaches this level is always a very, very safe bet because it can do three things, right? It can be too shallow. Actually, four things realistically. It can be too shallow. It can be tick perfect. It can break way above, or it can change the structure of the market by now going and starting a bull trend and reversing. You know, the reality of it is if you don't wait for it to retest, 3 out of those 4 things are going to stop you out, right? Or if you actually wait until we get this level and look for confirmation, well, you don't have to worry about being stopped out by the shallow. So now you have a 2 out of 3 chances by waiting for confirmation here to then go and take out that lower low. Hopefully that makes sense because there's 4 options. So if you eliminate the shallow one, now you have 3 options. Now, if you just wait for a break back above and confirmation, you know, you're playing with those 2 out of 3, which means the only time you get stopped out is if the market reverses, which again, there's signs for that. Hopefully that wasn't too confusing and I can get a little nerdy here. All right. So that is your 3 phases, your breakout, your retest, and your continuation. Now, quickly, I just want to go over demand, supply and demand, and why this works. Okay. So I'm going to give you guys a little narrative here. Maybe I'll use like McDonald's or something. I don't know. I don't know much about their prices, but let's just say a Big Mac is $10. I don't know how much it is. Okay. And right now, 1,000 people per day are buying at $10. Okay. Now, obviously that's not actually true. It's just numbers to make things simple. All right. Now let's say McDonald's runs a major deal, right? Where they're like, well, today Big Macs are $5. Do you think there's only going to be 1,000 people buying Big Macs today? No, there's not. There's going to be like 10,000 people buying Big Macs. But surprise, they only did this $5 deal for the first 500 people. Which means there's now 9,500 people that tried to get it that didn't get it. Right? Now, let me ask you a question. Do you think these 9,500 people are all like, oh, you know what? Now we're just going to buy it at $10. No, of course not. What do those people do? They wait for the next discount. Okay. Now I want you to think about that. When I said wait for the next discount, what does that look like? Right? Well, if we're in an uptrend, right? Like this, here, and again, I'm just going to use easy numbers, right? Let's say this is $10, and let's just say this is $1, right? Obviously, it's not mathematically perfect. Like, it could be different, but let's say right here, people are going to wait for price to go back to that initial discount area, and that's what you call your 50% discount, which often is right at the retest of that level, right? So this level here is where everybody was buying in high demand. Then the demand slowed down. Price broke back above, price increased. What happens is we pull back to that initial place where everybody was buying in high demand, which is essentially people waiting for prices to go back to that $5 McDonald's thing, and then demand spikes again, right? And then what happens is things are now $15. But again, what happens? Everybody that was buying at, over here at $5 and everybody that was buying here at 10, they don't imagine like all of a sudden start buying at 15, right? They're like, they wanted that Black Friday deal, right? So what happens is they start to wait, and they wait for that discount or that coupon to hit their inbox or their McDonald's app again. And then what happens? That discount gets sent out, McDonald's 50% off Big Macs today, and boom, the demand spikes again. That's why break and retest work, because it's showing you supply and demand, right? Here, there were a lot of buyers, and then sellers stepped in, right? People stopped buying, demand dropped, but then the value changed, and now it's $12, right? This is $10. Price pulls back to a similar level where that demand initially was, where everybody was raving for that price, and then they buy it up again because they're now getting that discount again. And we see the same logic with Black Friday, right? When you look at Black Friday deals, the market is pushing up, and then price pulls it to a discount on Black Friday, and what happens? The demand spikes. That's all a bull trend or a downtrend is, and that is why the break and the retests and the continuation is so powerful. Okay, so hopefully that explains the 3 market cycles, the 3 phases, and then the logic behind, discounts and these break and retest levels and why they're so powerful. Okay, and I think that about covers everything. So now let's go to the charts. So I'll go to NQ here. So NQ is a really good example. And I'm going to be doing majority of my analysis on the hour, the 4 hour, and the daily time frame, because they're just more true. If you start to look at it on the 15, 5, and 1 minute, can you do it on those time frames? Absolutely, you can. But if you want to have a daily bias and understand targets and levels and where we're likely to go, well, then you're going to want to look at these higher time frames to kind of create the narrative that then you can trade off of. There's just less fake outs on the higher time frames, to be honest. Okay, so this here is higher. You have your low, you have your higher high, higher lows, right? And maybe I'll draw this out for people who are just newer. Right here, you have your higher high. Right here, you have your low. Here, you have your higher highs. Here, you have your higher lows. Right, and there is your bull trend setup. So right now, we're in a bull trend that at the top begins to get weak. And then what is this? A trading range, right? So here's your bull trend. Then once we're in the trading range, you're going to want to be aware, hey, every time we get to the bottom, we buy. Every time we get to the top, we should be looking for shorts, okay? As long as there's confirmation at those levels. Don't just blindly short things. You want to look for it, right? And then here, you can see we have our... Right here, for example, we have our lower high. And then we have here, just copy this and paste this. We have our lower low. Right? Super simple. And then it just keeps this pattern keeps forming here. Right? Lower high, lower low. Right? And it just keeps forming. And that's your downtrend. Okay. And then of course, price does break structure here to the upside and start to produce some higher highs, higher lows, things like that, which is signs that we may be getting a larger correction or markets could be temporary reversing. But that is your downtrend structure, your bull trend structure, and then this is your trading range. Okay, so that's just some real life chart examples. You can see uptrend, and then let's see, find you the downtrend, and then here's your downtrend. Right, here's your high, your lower low, lower high, lower low, lower high, lower, low, and then we break above, and then we start an uptrend, downtrend, and we start an uptrend. This is kind of like a trading range, but inside of this you have your downtrends, and then up here you have your uptrends. So again, when you know we're in an uptrend, then again you should be looking for buys. Now I'm going to show you guys examples of that supply and demand example. So first thing we see here, right, is we break above this high here. Okay. Then we have what we call our breakout. That is our breakout, right? And again, let me put here the 3 phases so you guys can have them too. Let me just move my mic over. So here's going to be our 3 phases. And we're going to have our breakout, retest, continuation. Right? And these are going to be our 3 stages. So we have our breakout to the upside. We have our retest of that level that we broke out of. And then we have our continuation. Okay. Then what happens is we then break out above again. We then have our retest, which does what? It retests the level that we broke out from. Right? You can see this right here. We just miss it. But again, if you're looking on a lower time frame, you'll see the market structure shifts into things that you need to in confirmation. Right? And then you get our continuation. Okay. Now here you can see that at this particular level, we got a breakout above. We get a small retest here. I might not count that, but the breakout is very strong, right? But then we get a small shallow retest. It does not retest this, it just corrects. And then we get another breakout. Okay, look what happens here, right? We get a breakout above this level. Okay, breakout above this level. And then what happens? We retest that level and then we continue. When you look here, we get another breakout above this high here. And then what happens? We get a breakout. Right? We get the breakout. We get the retest of that level that we broke out from. And then we get our continuation. Okay? Make sure that's locked. Perfect. And then what happens? We break out above this level now. Right? Again, this is all uptrend stuff. The same thing I just showed you. Breakout. Then what happens? We retest this level. And then what? We go higher. Right? And then we kind of start to go sideways. But then what happens? Remember I said in a trading range, because this is a trading range, you want to wait for a breakout pullback. Right? Did I teach you guys that? Actually, I might have missed that. In a trading range, before you go short, like let's say price breaks out below, you want to wait for it to pull back to the bottom of that trading range and then go lower and produce that lower low, lower high, lower low pattern on the trading range before you actually start to confidently trade it to the downside or the upside. I might have missed that. I apologize. It was super simple on that. And then again, we break out of the highs of the trading range. And then what happens? We retest this level and then we get back above this level. It indicates our continuation and we take out that high. And you guys can see that just keeps happening over and over. Now, yes, we're sideways here and in a trading range, but if you begin to look at different assets and analyze things, you'll see that happen. So for example, I used it for a short on NASDAQ today, right? Because why? I saw that we had a breakout below these lows and then we retested the level here. And then I saw that we broke back below that level, indicating bearishness. And I took profits. I took about 2R on this trade, but you're looking for price now to take this low. Now, does it take this low tick perfect? It unfortunately it doesn't. It doesn't make it that easy for you today. But I mean, this is a massive drop, right? It's 539 all the way to, where did it go? Yeah, that's like 150 points, right? So it's a 150 point drop. And just looking at the 1 hour, having that break, waiting for the retest, and waiting for a break back below this for a continuation. Which is why I always say to trade in the discount, because this is also a 50% pullback of this downward leg to here. But when you draw your breakout levels here and we break back below, that's also additional confirmation for short. Now, if you're trading on the 5-minute time frame, you can now look to short below this level here, or if you're on a 1 minute, which I often trade, I'm looking to get in on the breakout below this level. right? Stop above this breakout level, and I'm just looking to take my profits, right? 2R or target the bottom. Unfortunately, we didn't hit that there, but again, that happens sometimes, but you'll see that it's very, very consistent. But again, it just didn't happen there. That's okay too. So that is the 3 phases. Now I'll show you on Apple. I'm very, very bullish on Apple right now. Let me go to the 1 hour here on Apple, show you that it works on stocks too. So you can see here that when you look at Apple, all Apple's been doing is breaking and retesting, breaking and retesting. So we have a break here. It doesn't get a retest. That's completely okay. But then we get a break right here. And you can see we break back above it, now indicating potential bullish continuation. And even if you didn't draw your levels there, you draw your levels like, let's say right here, because we did break out above this. You can see we retest the level here and we continue higher, right? And then we take out this high here. Then what happens? We have another break right here, right? At these levels and these levels. So you can see price came all the way back down to retest that level, which is your deep correction. And then price broke back above that level, signaling bullish continuation, right? And you can see how price jumps all the way up here. And even inside of here, you have all these structural, smaller break and retest continuations as well. Go on the 4 hour. Maybe the 4 hour will be a little cleaner, easier to read for everybody, right? Now, you can see here that we have another retest here. It doesn't fully get it. That's okay. Now you can see here that we had another breakout, retest, and then we go higher. Right? Continuation. Break, breakout, we retest that level, and then we continue higher. So right now we're having a breakout and a retest of that level. Can we potentially go lower here? I'm sure. But again, right, if you're just following what the trend's doing, well, most likely the most logical thing to do is for price to continue. Now, if price breaks back below here, right, obviously that is going to be your correction and your retest. And once price breaks back above, well, now I know, okay, if we're breaking back above this and we can't break out to the downside, well, that's a sign that we're going to then take out this high, right? And that's how I'm analyzing the 1 hour, the 4 hour, and the daily to make these decisions, right? And you guys can keep going through it and marking it yourself. You know, these levels are absolutely everywhere, even here, right? Go here, you get a break above this level, we retest it, we go higher. You get a break above this level, but we never actually go higher than this level, right? Which is a sign we do here, but you can see that this is a sign of weakness. And you also want to be very, very careful because we got a breakout of these highs here, right? All these levels here, and then we retested it here, and then we go lower, right? Then we broke this here. Here's our breakout, retest, and then we continue down, right? Same thing here. We get a breakout, retest, and then once we break below this level, there's our continuation. And here's a perfect example that I got to show you guys too, is if we, like here, the little bullish breakout, but you see how we never actually came back down and broke back above this level? So there's no continuation, which means what? We're bearish. That's also why higher time frames are very, very important too, right? You kind of see all the breaks and retests that are happening here, right? Breaks. You can see here how we get a break. We get it. We go down. We don't actually break below the level. We come back up. You can see here how we fail to get a continuation off that retest, and then we break back below this breakout, bearish breakout, and again we continue. Right? Again, so you can see here we break out, we then retest at level, and then we continue. Right? You can see here breakout, retest, continues. But you can really pair this with higher time frames here as well. So let's actually go to ES now, because we've been looking at NASDAQ. If we go to, like, let's say the weekly time frame, or even let's go to, let's see if there's anything on the monthly, right? So here's a good example, right? As you can see here that we had a breakout of this level here, and then price came back down and it retested this level. And then once price broke back above that level, that was an indication of bullish momentum. And you can kind of see this has been happening constantly, right? We break out, go back below. Once we break back above that level, bullish, right? Then we break out here. You can see you have a pullback into this level, and then we go higher. Here's your breakout. We pull back to that level, and then we go higher. Here's your breakout of these higher highs. Break, right? We make a higher low, higher high, back underneath this level to try to potentially make a higher low, and we break back bullish, indicating bullishness, which means that we're going to take out this high here, right? And you guys can see that this is constantly happening on every single time frame. Even if I go to the 15-minute time frame, yesterday RTY had very, very, very clean setups on the 15-minute time frame. Right, you can see here, we broke above this level, came back below, retest, continuation. Here, 15, break back above the level, we retest here, right, once, twice, and then we continue. We broke back above this level, right? We retested it right here. Here's a higher low, and then we continue. And then if you go to like your 4 hour, just because I want to make it clean, the 4 hour got a break, retest, and then continue. YM, right? All these assets, that's all they're doing, right? All they're doing is maintaining structure. They're breaking above the high, retesting it, and then continuing. Silver too, break, retest it right here, and then we continue up. I caught some very nice shorts on natural gas. Let me see the play that I did on natural gas. Right, we get a breakout here of this level. Right, price breaks out. Retest that level that I broke out from, and then it continued. Crude oil was the same thing, right? We broke out of this level, we retested it here, but we then have another breakout here, which we go above, but then price fails to actually return bullish here, and it begins to break out of that level again. This is more rare. Sometimes you'll see that you'll have like the same level get retested again and continue. It happened on ES about like a month ago as well. But we'll retest and now bearish momentum, indicating what? That we're then going to continue and take out the lows. Especially if you're looking at the daily time frame, it's a little bit easier. Let's even actually pop open the weekly time frame here. And this is why the higher time frames are so important, is because if you look on the monthly time frame, actually, let's go back even further. You can see that we had a breakout of this level here. Then we had a retest of that level, failed to break out, and now we're on our continuation phase, which means logically from a monthly perspective, the most logical target is going to be way down here, and we can really see crude oil tank way down here. Now, is this going to happen 100% of the time? No. But we now give ourselves odds. So we can say to ourselves, okay, because using basic market structure, there's a 40% chance that we come up here, and there's a 60% chance that we come down here. Right? And now you're just going on the lower time frames, and you're looking for those continuation patterns, which is how we're finding these patterns, right? Let me just remove everything. Right? So you can kind of see here now how all we're doing is, you can see here that we had a breakout, right? And then here, so we have a breakout level here. And then once price breaks back below this level, it's a sign that we're bearish, and we're most likely going to take out what? This level here. So now on an intraday time frame, all I'm doing now is the 5 minute, the 15 minute, and I'm just looking for logical shorts, right? So for example, here's a good example, right? We broke out of this here. We broke out, we retested a level right here, and then we go short. Then here we got a 15-minute level here again, right? What happens? We break out, we retest that level right here, and then we go short. Which is why I always tell people to use a 50%, because 50% often perfectly aligns with these retest levels, right? And again, why are we trading this like this? Because we're trading like this because the monthly is in a continuation phase. So now we're just waiting for a 15-minute breaks, retests, and continue. And where does that happen to be? At the 50%, right? Perfect. So that's why I always tell people use the 50%, because it's very, 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 very strong. And you can see here temporarily, even though we're on a 1 month continuation, you can even see here that we did have some bull trends here, right? We had this high, we broke above, we retest, we continued. Here we broke above, we had reactions here, but we did not continue, and we failed, indicating what? Bearishness and weakness. So then we have what? A break here, we break out to the downside, we retest that level, and then we continue. Then you have all these lows here that were broken. You can see them, all these lows. And what happened? We retested it, we continued. And we have this low here, right? Continued. And then we have this low here. We broke out, tried to make a higher high, Well, we did make a higher high. We failed to make a higher low, retested this level again, broke back below this level, and then broke back below this level, indicating massive bearishness that we are going to take out this low, right? So all I'm doing is analyzing the higher time frames, understanding the structure of those time frames, and then going on the smaller time frames and looking for your 50% pullbacks or your basic 50% break and retests, waiting for confirmation to then go with the overall trend. And it's really, really that simple. Like look at gold. I marked this out last night, and look what happened, right? We broke above, we retest, and then today we broke back above and we continued. And it's that simple. And I caught a beautiful long on gold this morning, right? And now guess what, right? We just had another break. Again, I'm always on the hourly because I don't want to get faked out by random price action. But again, we have our levels here now, and even potentially this level here. So what do I want to see? I want to see price break out, which it did. I want to see price retest these levels, failed to break below, and then break higher. And then I'll be looking for price to go and take out all-time highs if this structure maintains, right? And it's really that simple, right? You can see gold's been doing this the entire time. Literally breaks, retests, breaks, retests, right here, breaks, retests, here, breaks, we retest, we go higher, right? Then we broke these highs here, right? Boom, breaks, retests, fails to go lower, it goes higher, breaks, like that's all price does, right? So it's like you don't need 150 terminologies to realize that price just breaks, retest, breaks, retest, breaks, retest. Even on the NASDAQ, let's go to an hourly. Like you can see now, I'm hoping now that your eye is seeing this stuff, like all we're doing is breaking and retesting, right? Breaking and then retest here, right? We then have these highs, we break, we retest those highs. We break, we retest this high right here. We break, retest the high, fail to go lower, we go higher. That's all price is doing constantly on the 4 hour, the 1 hour, the day, every time frame, obviously, but that's all we're doing. So it's like when you're trading intraday, just mark out your thing here, come here, you set an alert at this level, and you add an alert. And then when price ding, 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 dings at 2, like this happened at 2 o'clock, you then go down to your 15-minute time frame, or your 5-minute time frame. You wait for the same thing to happen there, right? So let me give you an example that's more recent, so I don't have to go that far back. Let's see, was this market? Yeah, so this is market open, right? So here's YM, right? So here again, we had a break above this level, and we retested it. We failed to go lower. So now, if you go on your 15-minute time frame, you can see price is rejecting. If you go to a 5-minute, you'll get even more detail. 1 minute, you'll get the most detail, right? And you begin to see that we're getting breaks. Here we get a retest here, and I mean, price really, really buys. So you don't even honestly get much bullish structure in that, unless probably you go to the 1 minute, which I don't know if the chart will show me. Maybe like even a 3-minute you'd have to do. Yeah, I mean, price just was so bullish off that level. People bought up like animals. I mean, you do have little 50% pullbacks and break and retests in here too, though, that you could have been a part of. Now that you understand the target is going to be this high. Why is the target this high? Because think about it logically. If price breaks, retests, fails to break out to the downside, right? That indicates bullishness. So if we just put in this higher low here, where are we going? Simple, the higher high, right? And yeah, I mean, it's really that simple, right? And then you get all these break and retests here too, right? Break, we retest the level again. We do get a break above this level here, and we do fail to go higher, which is completely okay too. Which is why I like to, you always want to start on the higher time frame, because a lot of times, 1 hour can give you some fake outs too. So always start on the 4 hour, the 1 hour, the daily, the 4 hour, the 1 hour, because it's going to give you cleaner signals. But you can kind of see here too, right? We broke it here, we retest it. Now we do get a little buy right off of it, but it just creates a second leg down. And you can see we did break these lows here, so you do want to be cautious of a potential second leg down. But then boom, we smack right into these highs that we ran, and then boom, we get that continuation, And then again here, the clean bull trend forms again. Break, retest, continue, break, retest, continue. So it's really that simple, guys. It's not easy. It's not easy because you're still going to lose, right? That's the hard part. Is nothing's 100%, and you're still going to get faked out, especially if you're still new to understanding price action. But again, this is going to give you probabilities, right? Like right now, we're breaking out this high, so it's like if I set an alert right here. Now price runs all time. Well, it just did run all time high, but you know, like now I don't want to buy right here. Now, obviously, if I'm on a smaller time frame and it's logical to buy here, you can. But again, like on the 4 hour, you don't want to buy here. Why? Because you're going to buy, and what's going to happen? We're going to retest, stop you out, and then you're going to continue, and then you're going to tilt, right? So yeah, hopefully that explains how to analyze, you know, price action with just basic market structure. It's very, very simple. You can see that price, that's all price does, right? We break, retest, and then continue. That's all price does. And if price fails the continuation from the bull side, that typically means price is going lower. And then you can see we broke this low here, hits that, we continue, and then all of a sudden, boom, we start now doing, if you go down to the hourly here, all of a sudden we start doing bullish break, retest, continuation, indicating bullish momentum. Okay, so it's really that simple. If you guys have any other questions, feel free to reach me in my Discord. We have tons of traders in there that are pretty good. They answer any questions that are needed too. They're very, very, very awesome. And I'll also be doing some market analysis as well inside of the Discord. Maybe not every day, maybe every few days, just so you can kind of see these things in live time and learn how to trade around them. Right? I'll see you guys in the next video.